get some global perspective in. Peter McGuire, CEO at XM.com, joins us on the line from Sydney. Peter, thanks for joining us. Good morning to you. You know, it's so volatile. We've seen a bit of a rebound in commodity and hence equity across Asia. What sense are you getting?
Well, good morning. Thanks for inviting me on the show. A couple of things. I mean, it's 3 o'clock Sydney time this morning. I was watching the screens, and certainly it was quite negative. The oil market was down, and then all of a sudden it rebounded in the last couple of hours of trade. US stocks were higher. We saw that very heavy sell-off across the complex over the last really 5 to 6 trading sessions, and I think it's probably, you know, overrun itself to the short side, and you'll probably see a little bit of stabilisation around these numbers as far as crude's concerned anyway. So it's probably just taken a little bit of the heat out of it as far as downdraft, and probably just it'll settle down a little bit.
Crude is going to be very crucial. Kuwait has said that they are going to be working out a freeze even without Iran. The big question has been what it does for market share, because Iran has come back with a vengeance in the market. Do you see the global commodity markets really buying into this, and what is the impact it's going to have on equities?
Okay, first off, it's the 17th of April is the meeting. Secondly, yes, the Kuwait situation and what the comments coming out of there, and I still believe that, you know, where Iran is, they want to increase supply, and the world is awash with oil. Nothing's changed there. As far as volatility in equity markets, there is going to be some standouts that are going to do quite well, but I think overall the next 6 to 9 months are going to be an incredibly volatile period. And I'll explain why. I think first off, you've got the Brexit issue. That hasn't been resolved. You've got crude energy at oscillating between 26 and 40. Can't get a breakout on either side, and I think it's probably going to stay in the mid-30s or trend lower. And then the next part, I think, what happens with the US dollar, and then we roll it into Yellen, and then leading up to a US election. So I think all of that melting pot is going to be very, very difficult to find a trend in a market. I think it'll probably be very choppy over the next 6 to 9 months.
Peter, I just wanted to run through a couple of countries for you. Australia, Canada, Saudi Arabia, Iran, even the United States at the end of the day is the biggest producer of crude oil, shale gas, and Africa. Peter, I just want to ask you, how long can these countries who run their economies on commodities and companies which are now really under very heavy debt burdens because they took on such capital expenditure, how long can they handle it if commodity prices continue to drift downwards?
All right. First off, I think the fragility in the Australian market, record low interest rates, and probably room to move lower, similar to what New Zealand's done. So there's the first part. So I think that they're both going to be whipsawed, and probably it's going to be a pretty tough time economically in Australia. Roll Canada into that as well with tar sands and what they do as far as wheat and so on. So there's no doubt in that. You roll the next one, I think you mentioned Saudi Arabia. Major issues there, and you know they're looking at selling some form, I think 5% or a 7% stake in Saudi Aramco, and putting together a $2 trillion fund. They're doing that because they're realising the oil market is pretty well shot. The next one is the US. Well, where do you go from there? I mean, they've had such a massive uplift as far as equity markets since early 2009. 7 years it's been a cyclical bull market that's probably now starting to run out of steam a little bit, though. There's uncertainty in the market where what goes on as far as, you know, the Trump versus Clinton / Bernie Sanders and all of that in a melting pot is going to be, I think, a volatile time.
Absolutely. There's no way around it, Peter. It's going to be volatile. And all eyes are really on crude as well. So let's get you a very respected voice on this. The late recovery in crude has been after, as we've been mentioning, Kuwait said that a freeze deal is possible even without Iran. Vandana Hari, Asia Editorial Director at PACT, joins us on the line from Singapore. Vandana, great to have you on the story. Good morning to you. I'm going to start by asking you, is this going to A, fructify a freeze without Iran, and B, what is it going to do to oil prices from here? Because we've seen a sharp rebound on the back of this very statement.
Hi, good morning to you too and to your listeners. It is $1 million question right now whether the freeze will go ahead. We seem to be getting quite contrasting viewpoints coming out of, so we had the Saudi Crown Prince last Friday saying there's no way the Saudis will agree to a freeze without Iran doing the same. And then, as you mentioned, overnight we've had the OPEC governor of Kuwait saying it's fine, we will go ahead without Iran. So these seem to be quite contrasting points of view, and really the crux of the question whether it will go ahead, because even if, let's say, the major OPEC producers, and we've seen Kuwait and Qatar and Venezuela being at the forefront of this freeze proposal for the past several weeks, and Russia, a major supporter on the outside, even if they agree to go ahead, unless Saudi Arabia is on board, it really is not going to make any significant difference, because if you look at the whole freeze proposal, it's not about cutting production, but it's about holding it steady, as in not putting any extra barrels onto the market than what the producers were doing in Jan. And it's really Saudi Arabia which has any effective spare capacity to be able to put on extra barrels onto the market.
So you are skeptical about this one. Then I am going to ask you, what does this mean for oil prices? Because we've rebounded after hitting March 4 lows in the U.S. 35.89 odd is where we are. We've gone above 40, come back. What's the sense you're getting? We're at 38.47 on Brent right now. What's the sense? Where do you see it settle amidst all of this, different commentary coming in?
Yeah, so in March we saw prices go above $40 for both even WTI for a brief period and Brent for several days, which was nearly 50% rebound from the lows, the 13-year lows that we saw for crude in January. A lot of that was propped up by this whole talk about freeze, and some of it possibly also because the market, some had probably overshot to the short side of the market and were buying back their positions. But to my mind, and this is a very personal opinion, I think it's overhyped, the whole freeze thing. A couple of major things I would like to point out here. So first of all, if you do not disagree with the view that, and it's a well-accepted view, that there's an oversupply of about 1.5 to 2 million barrels per day in the market, then what the market needs in order to accelerate progress towards rebalancing is a production cut. The second thing is, which of course the freeze is not going to do, and the second thing is, even if a freeze agreement goes ahead, a lot of us who've looked at OPEC over the years know very well that historically it's been extremely difficult for the organization, let alone non-OPEC producers and OPEC, to comply with any production cuts. So, I as you mentioned, I am very skeptical. I have my doubts. It's a sad fact, though, that the state the oil market currently is in, it's going to hang on to every shred of hope it can get. And as a result, it's quite a knee-jerk emotional reaction that we've seen.
So Vandana, that brings us back to the crucial question. What's the fair value of crude, given the supply glut right now and the slowing economies, especially in China, etc.? What's the fair level, according to you, at Platts, and where do you see it settle? Because it's been hugely volatile.
So Platts assesses and tells you what it's trading at today. There is no concept of, and I doubt you'll be able to find anybody who can tell you what a fair value of crude is. But I guess there is a broad agreement that below $28 that we saw in January was overshooting a bit to the low side, just as over 40 that we saw last month on the back of the freeze is again overshooting to the high side, because if you look at the fundamentals, there is still supply glut, and there is of course Iran coming to the market. It's already started supplying more barrels, and in terms of demand, it's expected to grow about 1.2 million barrels per day this year. It could surprise us to the downside. So, perhaps somewhere between 35 to 40 seems to be par for the course for now.
Right, Vandana, great having you on the show. Peter, what does this mean for money flows, really? Because what has happened is that the risk on has been the theme, and we've had a very, very good amount of money flowing in, largely because of the Fed projections and, of course, the rebound in crude. How do you see that playing out?
Yeah, I mean, that's a difficult one to really cast your eye over. I mean, are we going to stay with the existing framework and what's happening as far as the Fed? I think that plays into it. Are we going to see softness in equity markets, and where does money flow then? So I think if we can't really draw on 15 as being a year to examine, because what we experienced in January was a different style of the market. January and February are massive sell-offs as far as equities. We're all worried about China. Then we've had a month of blue sky as far as China's concerned. And then moving forward, there seems to be, again, that heat has come out of the market. There's a little bit of fear there. As far as money flows, look, I think that traders are going to be very, very wary. They're going to understand that sometimes it's better to get a return of your money, not necessarily a return in a percentage terms. You know, you've got interest rates and what's happening as far as Japan and where Europe is. So it's a very delicate situation at the present time, and I think a lot of traders are probably just going to wait this one out over the next couple of weeks and see if they get a clearer understanding if we're going to see a further washout as far as crude.
Yeah, Vandana, good morning. I wanted to ask this question from a slightly different perspective. This is a very different world than the 1970s. You know, you have hard crude, you have soft crude, you have all kinds of refineries that can process anything, and you have shale. And many of these companies have invested billions of dollars, and they have to keep the cash flows going just to pay back their debt now. Looking at that scenario, Vandana, could we be in a situation that whatever these agreements say, at the end of the day, these countries whose economies run on oil and these companies who need to pay back these billions of dollars of debt simply have to sell oil at any price so that they can pay back or have cash flows to pay back debt? In that scenario, do you think crude oil could even head to 20? I mean, that there is no downside to it at the moment.
Yeah, you've hit the nail on the head in terms of explaining why a lot of companies and countries just have to keep pumping. Companies, because especially if you look at the U.S. shale scenario, where a lot of the smaller independent producers are heavily reliant on bank loans, and they have to repay the banks, at the very least, they have to keep repaying the interest on those loans as well. The situation is a little bit different where it's the national oil companies, and if you're talking about OPEC producers, but there as well, because of the slide in overall oil revenues as a result of the drop in price, they've been forced to pump out full tilt or even more if they can in order to keep the revenues up. Very similar situation in Russia as well. So then the question arises, what will this freeze do? Of course, you know, the U.S. is not going to be at the table. It's a very different kind of economics. The U.S. government can't tell the producers not to cut back production. There is already a drop in U.S. production happening. We see current production now around 9 million barrels per day in the U.S. Compared to a peak of 9.7, which was reached in April 2015. But in the OPEC producers, they can tell if they do agree to a freeze or a production cut, which is not really on the table right now, but they can tell the companies to do it. But again, you know, the question arises, the governments as well as the companies in these OPEC producer countries, or consider Russia for that instance as well, badly need the oil revenues. So as you mentioned, you know, they have been implementing spending cutbacks. They have, a lot of Middle Eastern governments are raising money. They are, issuing bonds, domestic markets, overseas markets. But there's only so much they can do to fill up the coffers that are draining very quickly on account of oil, which raises, a big question mark. Even if this freeze is agreed, what kind of compliance can we expect going ahead?
As we wrap up, Peter, last question. We've seen a bit of a rebound in Asia. Do you think we're going to build on this? Because, crude is a big concern, and that continues to be one. Also, we've had a pretty big sell figure yesterday from FIs in India for the first time in about 12 sessions. So what's the picture looking very quickly to you?
Well, yesterday's market, we only had two markets that were actually showing green, which was China and Singapore. Yes, today's trade, I think, will be a different situation. Australia will be off, but I think that we'll see probably 4 or 5 of those markets across Asia showing green. Tokyo was well off yesterday, about 2.38%, I think. So I wouldn't be surprised to see a little bit of a bounce on those, maybe up 0.5% from those lows on the back of crude. That's where I see it at the moment. But very difficult to forecast out over the next week or so. You know, it's if anyone says, well, where do you see the market? You've nearly got to say, well, what day and what time do you want me to have a calculated punt of guessing?